today. Brilliant. Okay, so I guess to give a step back in the agenda. So in this session, I want to cover an overview of the gender pay gap reporting requirements from the gender pay gap regulations, to give you a flavor of the requirements, what's being asked, and then from then we'll move on from the key figures from the gender pay gap reports for 2022. So we here in the reward services team in Deloitte Ireland have compiled over 350 company reports from gender pay gap reporting in 2022. We'll give you some analysis from those reports, some key data and insight from that as well. On top of that, we'll review the key learnings from this first year of reporting in gender pay gap 2022 and what companies should be doing now to prepare for a December deadline. Again, this is the second year of reporting with the December deadline. Then I'll have some concluding remarks and open up for a Q&A time permitting. So I guess firstly, when we're talking about gender pay gap, it's important to make a distinction between gender pay gap and what equal pay is. So the gender pay gap is a measure of the difference between men and women's average earnings across an organization, whereas equal pay means that men and women in the same employment must receive equal pay for equal work. And I'd note that the Employment Equality Act outlaws discrimination in regards to equal pay, whereas with gender pay gap, you have this new set of regulations that came in last year, which has certain reporting requirements for organizations who fall under the threshold. And I'll talk about this now in terms of which companies fall under which threshold and the reporting requirements that come from these regulations. So let's take a step back. The Gender Pay Gap Information Act was introduced last year for the first time. So it required organizations to report on their hourly gender pay gap across a range of metrics on an annual basis. So last year was the first year of reporting. We're now in the second year of reporting. However, for this year and last year, only those organizations with over 250 employees had to publish the gender pay gap metrics and a subsequent report on their website by December of last year. This is the same for this year, so it's still 250 or more employees that have to report for this year. However, for organizations with 150 and 249 employees, this threshold will reduce next year. So next year, if you have an employer and they have less than 250 employees, but over 150, they'll have to report. And then the threshold will further reduce again in 2025, so that organizations with over 50 employees will have to reduce. So you can see there's a steady fall in the threshold in terms of which employers fall under the scope of these regulations. And by 2025, if you have an employer, a company with over 50 employees, they will have to report on their gender pay gap in 2025. So a lot of companies, yes, they may not fall under the scope of gender pay gap this year. They may not fall under the scope next year, but it's really imperative that you start getting your plans in place, your processes in order, so that you can be fully prepared for reporting either in 2024 or 2025 when these thresholds ultimately reduce. So, like I said, the regulations were introduced in 2022 for the first year. So organizations have to pick a snapshot date between June 1st and June 30th of every year. So for example, let's say an organization picks a snapshot date of June 30th in 2023. They'll have to look at all of their pay data from June 30th, 2023, all the way back to June 30th in 2022. So it's a 12-month period that you have to look at all of your pay elements to all of your relevant employees. And thus, from that, you can calculate all the required gender pay gap metrics from organizing all of your data from those 12 months. I would note that you only include pay data for relevant employees, i.e. employees that are employed for your organization on the snapshot date. So if an employee left in May 2023, they left the company for good, they're not included in the gender pay gap regulations. So you only include active employees as of on the snapshot date. So I covered the threshold there in terms of how it reduces year on year. And finally, employers must disclose on their website their gender pay gap report. So there's one thing doing the metrics, calculating all the required data, the mean, the median, hourly pay gaps, for example. But then it's another thing to actually write your report. Some companies, from what we've seen in our analysis last year, have made a very bare bones report. It's a one pager. It gives you just the metrics that they're required to report by the regulations. Other companies have created, 4 or 5 pages. They've made it very glossy. It looks very good, etc. So we've seen quite a difference in terms of how companies decide to publish their report, how it looks, and things like that. And I would note there's no central portal for publication. So there's no central government portal that every relevant company can publish their report onto. These reports have to be published onto the individual employer's website, right? So I guess when you're trying to amalgamate reports to try and make some inferences from the data, it's quite difficult because there's no central place to find all these reports. You have to go company website by company website to find these reports. So hopefully a government portal will come in 2024. We don't envisage it to come in 2023, unfortunately. So on the right-hand side, you can see the disclosures that are required per the Irish Gender Pay Gap regulation. So there's the mean gender pay gap, which is the average hourly pay gap in the company. The second requirement is the median gender pay gap. So that strips out outliers. So it's not the average, it's the middle point of the company. It strips out outliers. So it takes away very highly paid employees in the company and very low paid employees in the company. Some argue that the median gender pay gap is a more fair reflection of a company's hourly gender pay gap, given that you're stripping out these outliers. Again, if you've temporary and part-time employees, you'll have to calculate the mean and median hourly gender pay gap of those employees. You'll also have to calculate the proportion of male and female employees who have received a bonus in the snapshot period, as well as the number of male and female employees who've received a benefit in kind during that snapshot period as well. As well as that, you'll have to go into your bonus figures and you'll have to calculate the mean and median gender bonus gap for your employees every year. And also, and I find this a very important piece of information to detail, the proportion of male and female employees in each pay quartile. So what does that mean? That means taking all of your employees, filtering them from the most highly paid employee to the lowest paid employee, and splitting up those employees from most high to lowest into 4 equal pay quartiles: the upper quartile, the upper middle quartile, the lower middle quartile, and the lower quartile. So now you have your employees in 4 equal pay quartiles. Within that, you have to calculate the percentage of male and female employees within each quartile. So what we're seeing as a driver for the gender pay gap is a large proportion of male employees within the upper and upper middle quartiles. We're seeing the percentages range from 70% male, 30% female in the upper pay quartile to 80%, 20%, etc. Right. So in our experience, we're seeing the upper pay quartile being commanded by a large percentage of male employees. Thus, that's driving your mean gender pay gap, median gender pay gap, right? Because in your very highly paid positions, a lot of those positions are being commanded by male employees, but we'll get into that a bit later in terms of what we're seeing as drivers of gender pay gap. So moving on, I've explained some of this. So this is just a fact sheet, really, of all the different requirements that you're required to publish, the definitions, etc. I've touched upon these in terms of how to calculate them. This is a nice, I guess, slide to make sure that you're calculating all your required metrics in the right way. And I guess I would always come back to this fact sheet when you're calculating gender pay gap. And this will be sent to you after the session as well. So I think this is a really, really important slide to study and to make sure that you're calculating your metrics correctly. So Deloitte Ireland, as I said, we combined 350 company reports. Again, going company website by company website. There's no central portal, so quite a tedious process to compile this information. Hopefully the government will release this portal next year, so it'll be a lot easier to take some inferences from the data, right? But we've got 350 company reports from gender pay gap reporting in 2022, and we've made some I guess we've outlined some evidence from what we've seen. So on the left-hand side, you can see this table. Overall, from these 350 companies, we found that the mean gender pay gap is 13.3%, the median gender pay gap, 10.2%, the mean bonus gap, 24.2%, and the median bonus gap, 6.4%. So you can see these are high enough figures, and it's certainly the case that when we look at the nonprofit sector, these are high enough figures. It'll be very interesting to see what this figure will be this year in 2023. We won't know what this figure will be until January of next year, once all the reports again are collected, given that companies only have to publish the reports in December of this year. And I'd note the last big report that was published in terms of Irish companies' gender pay gap was in 2019, where the mean gender pay gap was 11.3. So again, we're seeing in and around this range of 13.3, 11.3% for companies' mean gender pay gaps. We then went one step further. We split the mean and median gender pay gaps by sector. So in terms of our 350 company reports, we then went in and we started filtering per sector. So the sectors we have is government departments, consumer industries, life sciences and healthcare, energy resources and industrials, technology, media and telecommunications, and the financial services industry. So as you can see, some sectors fall below what we're seeing in terms of the overall mean and median of 13.3 and 10.2. For example, government departments perform quite well against the average. Consumer industries perform quite well against the average. However, when we look at the financial services industry, when we look at technology, media, telecommunications, these sectors are going over the average. So it's interesting to see which sectors are performing well, which sectors are not performing well. And it'd be very interesting to see from, I guess, our perspective, from employees' perspective, what companies have done last year versus this year. What plans have they set out that they wanted to achieve that they said will reduce their gender pay gap over time, whether that has in fact reduced their gender pay gap or not, and whether these policies have become effective, whether they were effective or not. So what we did is from those 350 company reports, we focused on the non-profit sector. We looked at 30 Irish non-profit organizations that had a requirement to publish their gender pay gap reports at the end of 2022. So we saw an overall mean gender pay gap of 3.8%, an overall median gender pay gap of 0.1%. So like I said, when you compare that to the previous slide, this is quite a bit smaller than what we're seeing in terms of an average mean and an average median. 3.8% and 0.1% are very good figures, because at the end of the day, in terms of gender pay gap and the regulations, what do you want to achieve? You want to achieve parity. You want your overall mean and overall median to be as close to 0% as possible. However, with the caveat being that not every organization will be able to bring their gender pay gap to 0%, given certain gendered roles where there may be an influx of male employees within certain roles that cannot be filled by female employees for a whole range of circumstances, and therefore you won't be able to bring your mean and median pay gaps to zero. But the overall aim of these regulations and the overall aim for companies should be to bring their gender pay gap, mean and median figures as close as they can to 0%. So these figures are quite good overall in terms of 30 companies. And in terms of some high level analysis and information that we've picked out from these 30 non-profit companies. So the mean gap had a big range, right? So it ranged from minus 16.89% to plus 22.6%. So to break that down, minus 16.89% means a mean pay gap that favors females. So I guess conversely, a 22.6% pay gap is a pay gap that favors male employees. Again, we want to achieve parity, we want to achieve 0% as close as possible. But as we can see from these 30 Irish non-profit companies, this is quite a split. We're seeing some companies have a mean pay gap that favors females. We're seeing other companies that has a mean hourly pay gap that favors males. So quite a split quite a range, I guess, looking at these companies. The second point that I'd like to point out is 30% of these 30 organizations have a negative mean hourly pay gap, which again, as I said, indicates that there are more females than males in higher paid roles, which is very interesting. So, 70% of these organizations have gender pay gaps that favor male employees. Let's see, as the years go by, whether these figures will change and whether we'll get a more equitable result as the years go by, and hopefully as companies create diversity, equity, inclusion strategies that help female employees, that we'll see these figures change as the years go by. Then moving on to the median gender pay gap, again, we're seeing an even bigger swing in these ranges. So all the way from a minus 29% median gender pay gap, which favors female employees, all the way to a 25.6% median gender pay gap, which favors male employees. So again, big swings depending on which company in the nonprofit sector that you're looking at. And again, from our experience, this all comes down to representation, which employees are in the upper pay quartile, as I alluded to earlier, which employees are in the highest paid positions in a company. This all feeds into why these gender pay gaps exist. And again, 47% of the 30 organizations show a negative mean hourly gender pay gap. So, nearly half of these organizations have a median gender pay gap that favors female employees. So that's quite interesting. So again, when we're talking about parity, that's quite interesting that nearly half of these organizations have a median gender pay gap that favors females. Again, is that a good thing? Yes or no? My answer would be, let's try get to parity. Let's try get to 0% as much as possible as the years go by bringing in these different initiatives, diversity, equity, and inclusion initiatives, to try and bring these overall pay gaps to 0, as the regulations will ask you to do. So what we also did is we went into the gender pay gap reports and we actually read them. We read why these companies were saying they had a gender pay gap and what solutions that they had to counter this gender pay gap. So within these nonprofit sectors, we're seeing that there were 4 reasons: occupational segregation, working patterns, also shift premiums that these working patterns bring that more favor male employees, and also length of service / years of experience that were another reason for gender pay gap. So I guess firstly with occupational segregation, some occupations have typically attracted more women than men, as I alluded to earlier. So there's more occupations that will attract more men than women, and it's very hard to fill these occupations with females, even if you have a very detailed plan to do so. In addition, a number of the lower paid roles in these types of sectors are gendered. So women could also be overrepresented in certain sectors as well, right? So looking at it from the opposite view, women could be overrepresented in more lower paid positions, admin positions, which is what we're seeing these companies explain. So we're seeing more women in lower paid positions that are bringing down the hourly pay gap for females, and thus bringing a higher pay gap overall that favors males, right? So it's looking at this occupational segregation piece. It's looking at which jobs, which functions attract male employees. Are these male employees within these sectors attracting the biggest pay rises or payouts, thus driving a pay gap? And also pinpointing, well, in our lower paid positions, are female employees making up a lot of those lower paid positions, like I said, admin positions, for example. So it's very interesting to see, once you've calculated gender pay gap, to then do a further deep dive and see, okay, well, what's the driver of our gender pay gap? Where are male and female employees sitting within our organization? And therefore you can get somewhat of an explanation as to why your gender pay gap may or may not be existing. Then moving on to working patterns. So I guess adding on to this, that we're seeing more female employees within part-time roles, right? So these are roles that are only lasting for 20 hours in the week. It wouldn't be full-time. It wouldn't be the most highest paid. They wouldn't be the most highest paid positions in the workforce, and also it would affect career progression within a company, versus employees who are working full-time. They get more career progression opportunities versus women who may tend to work part-time, instead, due to familial commitments. For example, we're seeing that as a big as a big explanation for companies as to the driver of the gender pay gap. More women in part-time positions. These part-time positions aren't paid as much as full-time, and thus that's amplifying their gender pay gap that is favoring male employees who don't take up these part-time positions as much as their female counterparts. Also, I'd make an extra point around shifts. So we're also seeing that male employees take on more shift positions that pay premiums, for example, working on Sundays. We're seeing more male employees take up these positions versus female employees. So again, these are all determinants of the gender pay gap. These shift premiums pay more, right? If you're working on a Sunday, you're going to get paid extra. Again, this all feeds into driving the gender pay gap more towards male employees, and we're seeing that as a big explanation as to why these gender pay gap exists. And we're also seeing kind of length of service / years of experience feed into this as well. So we're seeing women who have taken career breaks, who have gone on maternity leave, have familial commitments, being somewhat disadvantaged within the company, because we're seeing their male counterparts who aren't taking these breaks. They're getting their promotions, they're getting their pay increases. They didn't have to take a career break, etc. So we're seeing some females being disadvantaged, right, by taking maternity leave. So it's very important for companies to take a step back and go, are our female employees being disadvantaged by going on career breaks, maternity leaves that may have to do with commitments to family, etc.? If they are, what can we do to make sure that they do not get disadvantaged once they return to work? What policies, initiatives can we implement to make sure that as soon as they come back into the job, that they are not disadvantaged versus their male counterparts in terms of promotions, in terms of salary increases, etc. So it's a really important point, and if your company hasn't thought about this before, I'd really urge you to think about how your company deals with this very important issue. So then moving on to solutions, right? So what solutions do companies have for these drivers, for these reasons of their gender pay gap? So we see companies reviewing their recruitment practices firstly. So they're seeking a gender balance in shortlists for certain roles, right? So they'll have a gender balance of a 50-50 split for all of their roles, right? So very, very equitable. We see companies employ unconscious bias training for hiring managers and the HR team. We're also seeing employees ensure that they have a diverse interview panel, right? So that when interviews do take place, the interview panel is very diverse, again, split 50-50 if possible as well. So everything about diversity and inclusion you can see here as well. And you're ensuring that, in terms of documentation, that the employer has a branding that is gender neutral, right? So you're really seeing this push for gender neutrality, gender balance, and things like that. We're also seeing job descriptions change a lot. So we're seeing job descriptions and recruitment processes in terms of the wording, remove barriers for women and minority groups. So it'll help them progress through the interview process. What we've seen is some companies are saying, some male employees will say, okay, well, I can't do this and this, but I'm still going to apply for the job. We're seeing some female employees go, okay, well, I can't do this and this, let me not apply for the job, right? So we're seeing companies break down these barriers to ensure that they'll get as many applicants as possible, and to break down the barriers, especially for female employees, so that they feel empowered to apply for these jobs. Because what we're seeing is, more male employees, and this comes down to what companies are saying, and also some research that I've read as well, that some more male employees are going, look, I can't do this and this, but I'm just going to apply for anyway, right? More male employees are inclined to do that versus female employees. So we're seeing these barriers being broken down, thankfully, by companies as well, which is very important. We're also seeing companies review their pay and progression policies. So we're seeing more companies become more transparent in terms of their pay. This is especially important as we see the EU Pay and Transparency Directive come into place, that employers start being a lot more transparent in terms of how they talk about new roles, how much the range of the salary that comes with that role, etc. So that's really important that we're seeing a lot more transparency in terms of how companies are setting their salary. We're also seeing the salary negotiation process being a lot more equal and fair. And we're also seeing companies embed a very robust talent pipeline process, right? So companies can go, look, we have more males in the upper quartile, we don't know what to do, etc. So what companies are doing now is from the very bottom of the organization to the very top, they're implementing a robust talent pipeline framework to make sure that females are constantly progressing through the business, and ultimately that they'll progress to the very top of the business, right? So some companies I've seen have set a 50-50 male to female split in their senior management position, in their boards, etc. So we see some companies by 2025, 2030, they have set themselves a target to have a 50-50 male to female split on their senior management board, on their executive board, for example. So we're seeing this robust talent pipeline become a very important process for companies, yes, to break down the gender pay gap, but also to progress females throughout the business because of all of these barriers that I've talked about before, occupational segregation, working patterns, etc. So that's really, really important. We're also seeing companies implement some leadership development policies and programs to empower women in the organization. What we've seen is some companies introduce a mentorship program. So we'll have some very senior female employees in a business mentor some newly hired females in the organization. They'll mentor them, they'll upskill them, they'll basically, bring them through everything that they learned in their career in terms of how to progress and things like that. So that's what we've seen. Companies have said that it's been invaluable, this mentorship program, this leadership development program, that they can develop their female talent, especially in the market for talent that we're seeing nowadays, right? So the market for talent is extremely competitive. We're seeing some companies that we've worked with say, look, we've really developed our female employees. We've had great programs to progress them, develop them, etc. And after all of this time that we've put into them, progress them, we've said that they'll be, in the senior management team by 2025. They've left for a better offer, right? So it's a hard problem to find a solution for. But look, I think you still have to put these processes in place to develop your female talent. And I guess that's another issue in terms of how to attract and retain the best talent in the market. But I'm sure we'll do another webinar on that at some point in terms of how companies can do that. Also, what we've seen after COVID, we've seen a more flexible workplace. We've seen the introduction of remote working. We've seen the introduction of hybrid working. We've also seen the introduction of flexible working. This is extremely important for female employees as they have more familial commitments. That's what companies are telling us. That's what their female employees are asking for. Can they get more flexible work hours, that they don't have to start at 9, they don't have to finish at 5? They could start at 11, they could finish at 7, etc. Right? So they can work when and how they like, as long as the work gets done. That's what we're seeing a lot of companies employ year on year. That's another initiative that we're seeing within these reports, that companies are implementing this very flexible hybrid, sometimes remote work schedule. And we're seeing a big and great response from female employees that really value this offering that will help them in their careers, right? So they won't have to go part-time because of a very rigid working structure. And we're seeing great kind of uptake in terms of these types of patterns. So that's come out of COVID. And we're seeing companies build upon this. And it's also being uptaken by male employees as well, right? So a lot of these initiatives that do help female employees also help male employees as well, right? So hybrid, flexible, remote, that also helps male employees, right, as well. So all of these policies, yes, they are targeted to reduce the gender pay gap, but these can also be used throughout the business as well. So this is great because it's getting companies to think about their diversity, equity, inclusion policies, how they can help employees in the business as well. So we're seeing all of these policies and initiatives outlined in these gender pay gap reports. So it'll be very interesting to see what progress has been made on these initiatives that companies have made, and whether it has reduced the gender pay gap or not, and how companies are building upon all of these great initiatives that they have outlined in their gender pay gap report. So very interesting. This is a great step in the right direction, in my opinion, in terms of how companies are treating their employees, giving them more flexibility, and improving their work-life balance, etc. So I think this is great progress. So hopefully we'll see more rhetoric like this, more initiatives like this as we move into 2023 gender pay gap reporting. So as I said, we're now moving into the second year of reporting. This is a rough roadmap in terms of how companies can go about calculating the gender pay gap, the processes they should follow, the issues that they need to think about before they report, right? So I guess if this doesn't apply to your company, but it may in 2024 and 2025, as I said, when the threshold reduces, this is a really important slide to think about and to ultimately implement once gender pay gap reporting becomes mandatory for you. We also seen companies report the gender pay gap voluntarily because it's what we see as best practice in the market. That companies are saying, look, we have a great diversity, equity, inclusion strategy, great framework. We want to reduce our gender pay gap. We champion bringing our gender pay gap down to parity, and we are voluntarily reducing our gender pay gap. We've seen some companies do that last year. So whether you have to report or not, I think this slide is very important. So we suggest to break down your gender pay gap project into 5 stages. Assess the requirements. So the requirements that I went through earlier from the gender pay gap regulations, i.e. what are all the metrics you have to report on, and then how will you report on those metrics? So how will you pull all the data so that you can calculate all these metrics? So that's, I guess, the first step. Assess the requirements and make sure that you're able to fulfill those requirements, right? Make sure that you can pull the data from your payroll team in order to do the calculation. So that'll be the second step. Collect your data. Ensure that you have picked the snapshot period, let's just say June 30th to June 2022, for that 12-month period. Collect your data within that period, and put it in a very easy to understand format, right? Be it in Excel, or if you have another system in order to pull all your data into, that's in a very easily digestible format so that you're able to do your calculations. So once you have your data, once you have it in a easily digestible template, let's just say Excel, for example, then you need to complete your calculations. In order to complete your calculations, I'd suggest you look at the regulations. There's many different publications from the government in terms of how exactly you can calculate these metrics. So you might maybe asking yourself, how do I calculate the mean gender pay gap? How do I calculate the bonus gender pay gap? What formula should I use, right? So that's a very fair question. We saw companies last year get very confused into, okay, I have my data, but how do I calculate the metrics? How do I use the formulas? the government has published numerous reports and documents in terms of how you can do that. So again, I would suggest before you go about doing your report, your calculations, make sure that you understand how exactly you will do these calculations, what formulas that you want to use. Once you've done your calculations and once you've calculated all your required metrics, I would then suggest that you set your gender pay gap strategy and you obtain buy-in from your internal stakeholders, right? So it's not a simple process of, okay, well, we have our metrics, let's put it into a simple report and publish it. You have to obtain buy-in from your internal stakeholders, your HR team, for example, and also you need to understand who do you need to obtain sign-off from within your organization before you publish. So does your CEO need to sign off on this report before it gets published? Is it your CPO, your CFO? Do they need to review this report before it gets sent out and published? So obtain that buy-in, explain your metrics very clearly, and make sure that everyone in the organization, in terms of your key stakeholders, your HR team, etc., that they've bought into this process, that they completely agree with your report, your metrics, etc. Before you write your report, right? So the last step will be writing your report and then ultimately publishing it. As I said, some companies choose to do a one-page report, very bare bones. It's one page just with the metrics that you're required to report on, right? So other companies we're seeing make it very glossy, very interactive, and very easy to digest. You have your metrics, you have your reasons, you have the reasons why these metrics exist, and then you have a great other page on all these initiatives that this company wants to enact in order to bring down their gender pay gap as well. So we're seeing reports really vary in terms of how complex it is, how long it is, etc. And then ultimately, once you write your report, once you've obtained sign off on your report, you will have to publish on your company website in December. So for example, when you pick your snapshot date of June 30th, for example, you have to publish no later than 6 months after that snapshot date. So if you pick June 30th, 2023, you'll have to report by December 30th, 2023. That's the last date you have to report on. Of course, you can always report before that, right? So you could report on December 1st, December 2nd, etc. December 30th would just be the deadline in which you have to report by. You cannot publish beyond that date, or else your employee base could take you to the Workplace Relations Commission, for example, right? So very important that you publish within that 6-month time frame after your snapshot date. So again, if you pick June 30th, you'd have to report by at least December 30th, 2023. So looking at the bottom half of this page, this gives a little bit more detail in terms of, what you should be doing month by month. So in June, I would suggest you choose your snapshot date and you understand the methodology, right? So whatever snapshot date works for you. So some employers that we've worked with have a payroll or payout date to their employees of, June 17th, for example. So they'll pick June 17th. Others want to give themselves the most amount of time possible to do this report. So they'll pick June 30th. They'll give themselves until the very last day to do this report. So it's up to the employer when they want to choose a snapshot date, and also understand the methodology. Read the gender pay gap regulations, read the FAQs from the government and all the different documents that they have published, so that you can really understand what this gender pay gap regulation and legislation is asking me to do, all of the metrics that I have to publish, and to make sure that I am fully adherent to the regulations once I've ultimately published. I'm not forgetting anything, right? So really important to understand the methodology. Then in July, we suggest to, again, calculate the data, make sure all the data is being collected accurately and that it's being put in a very easy to understand and to digest format so that you can very easily do the calculations. Once those calculations are finished, again in August, we would suggest to analyze the key drivers. So you may have a mean gender pay gap of 10%, but why does that exist? You'll have to go deeper into the data. And again, that's why it's so important to have it in a very easy to read format, because once you go back to see, well, why is our gender pay gap 10%? You can look at your gender pay gap by function, right? So is there a function that is driving this gender pay gap where male employees are receiving very high hourly pay figures, or is it a location, or is it because of our pay quartiles, right? So very important to analyze the key drivers of your gender pay gap, to again put that into your report. September to October, I'd suggest to draft your narrative for your final report, communicate that with your internal stakeholders, and then in November to December, get ready to publish your gender pay gap report on your company website. So these are all very, very important steps to take. And we found this is very helpful format and roadmap to follow in terms of your gender pay gap journey. So lastly, I touched on the legal requirements on the left. So you have to report all of the metrics that I talked about. So your mean and median hourly pay gap, your bonus pay gaps, etc. We've covered that. Also, the reasons for these differences, right? So you have to detail why these gender pay gap metrics exist, be it in favor of females, be it in favor of males. So why they exist. Again, that'll come from your extra analysis when you dive deeper into the data. So is it because of this function? Is it because of the upper pay quartiles favoring men, right? So what are the reasons? You'll have to detail that in the report. And then thirdly, you have to detail the measures being taken to bring this gender pay gap down to parity, right? So that's also very important. What measures are you taking to bring your gender pay gap down to zero, to eliminate it, I guess, as well? So those are the legal requirements. On the right-hand side, you'll see, a best practice almost report, a market practice report in terms of extra sections of detail that companies are providing. So you'll have a forward or an introduction from the CEO of the company explaining what gender pay gap is, the company's journey with gender pay gap, diversity and inclusion, and the journey that they want to take in the years going forward. This can also be supported by a piece from the chief people officer or the head of human resources as well. And as I alluded to in the third section, sometimes companies will give their journey to date on their positive change, the diversity, etc. Right? So what has this company done already in terms of diversity and inclusion, how they're helping female employees in the business, but also other minorities in the business, right? So you can open the scope up in terms of everything your company is doing with regards to diversity, equity, inclusion. So you can really showcase what great things your company are doing already when it comes to diversity, equity, inclusion. If you've done an equal pay audit, you can also say how your gender pay gap differs from equal pay. But also, as I alluded to earlier, it's very important for your employees to understand, okay, well, gender pay gap does not equal equal pay. You may not have an equal pay issue, right? So it's very important that you set in stone for your employees to say, look, the gender pay gap doesn't mean that we have an equal pay problem. The gender pay gap, a lot of the time stems from representation issues and things like that. So very important to set the picture there. As I said, you could do an equal pay audit if you want to make sure that you don't have an equal pay issue. And again, very important to disclose your required gender pay gap statistics in section 6, right? So that's regulatory required. How you use your DEI initiatives to attract and retain talent, and you can use case studies as well if you want to. So very, very important to touch upon case studies as well. You can use different female employees in your company to say, look, this initiative that this company brought in, we found it really, really helpful in my personal experience. So it could be the impact of flexible working for a female employee. You could bring in a case study to say, look, this is an employee, they were struggling with this rigid timeline in terms of 9 to 5. We made our working hours a lot more flexible, and this has really helped some of our female employees. And you can actually use a case study to show one female employee in your business that has really, really benefited from this particular initiative, right? So conscious of time, run over a bit. So thank you very much for attending. Like I said, gender pay gap, a very, very important step for companies to take to really talk about and think about the diversity, equity, inclusion within their companies, how they're treating, yes, females within their organizations, how they can help help them in the organization, but also to think about diversity, equity, and inclusion from an overall lens. So what are you doing for other minorities in your business? How are you helping them? What initiatives do you have for them, right? So this is, I think, gender pay gap reporting is the great step in terms of diversity and inclusion in general. How are you helping employees in your business, and the different initiatives that you can bring in to help these employees as well. So I very much welcome gender pay gap reporting from my perspective. I think this is great, and it's really gotten companies to think about what are they doing, how are they treating their employees, with equity, with fairness, etc. So I think this is great, and let's see what happens in the second year of reporting, and maybe if companies have brought in better initiatives for this year. So again, I'd like to thank all of you for attending. Very much appreciate. If you'd like any further help, if you're calculating your gender pay gap, please feel free to send me an email, get in contact with me. I'd be more than happy to help you. I don't know if there's any time for questions. If not, I can follow up.
We have a few questions in, Mark, if you have a couple of minutes. So first of all, is there a requirement to include comparative figures in the first year of reporting?
So yeah, in terms of second year, it's the second year of reporting. There's no legal requirement to say, okay, well, these are our figures last year, these are our figures this year. You don't have to put it in the table. But what we're seeing is that companies this year will say, okay, well, our gender pay gap is X% this year, it was Y% last year. This change has occurred, and this is why the changes occurred. So I would say it would be best practice to compare your results this year versus last year.
Okay, and then on that is where employees are on pay scales, is there anything that can really impact the gender pay difference year on year?
I would say it would come down to representation, right? So it's how many female employees you can progress into the upper and upper middle pay quartiles. That's what we're seeing as being a big determinant of driving down a positive gender pay gap that favors males, introducing more females into the senior management positions, executive positions, etc. So it'd be really important to have a robust talent pipeline that you're progressing females into those senior positions as much as possible. That may take time, right? Because things tend to be sticky. Employees may not move, they may not retire, you may not have these positions open to progress these employees into these positions, right? So these things take time, and they're quite sticky in terms of pay scales, in terms of representation. But so, these things will just take time, sadly. But when you're waiting for these positions to open, create that robust talent pipeline so that when these positions open, you'll have these female candidates that you would like to progress into these upper pay positions, and thus that will ultimately have an effect of driving down your gender pay gap.
Great, thanks. Just a couple more. I think we've got a few more minutes, if that's okay. So do these numbers need to be audited in advance of the reporting?
Sorry, I didn't catch that one.
Do the numbers need to be audited in advance of the reporting?
So there's no requirement per the regulations. You have to audit your calculations. So there's nothing in the legislation that you'll have to get an independent auditor to come in and audit these calculations, right? So that may change down the line, but for now, no.
Great. Okay. Can you change your snapshot date each year? For example, if you installed a new payroll system and it makes more sense to have the date as the payroll date, but that might not be necessarily the way it was set up.
Exactly. You can pick June 30th as your snapshot date last year. You can pick June 17th as your snapshot date this year. Just be conscious that your data may be a little bit different when you're making a comparison year on year. But yes, you can change your snapshot dates year on year.
Okay. Who typically prepares the calculations or the report? Is it typically HR or finance or payroll?
We see payroll combine all of the required pay elements and metrics and data. We see payroll put all of this data into a spreadsheet, and then we see HR or finance teams do the calculations, right? So we see a combination of payroll teams pulling the data, then we see HR and finance teams calculating the required metrics.
Okay, and then the very last question is gender pay gap reporting as part of ESG.
Is it a part of ESG?
Yeah, part of the ESG reporting. Yeah.
So we see gender pay gap reporting fall under the S of ESG, social, and we actually see gender pay gaps sometimes fall under certain social targets that companies will make as it relates to ESG. So some companies' bonus metrics will have a social target that they'll have to hit in order to get a payout. Within that social target, we see, you know, a gender pay gap figure possibly be a part of that target, right? So a gender pay gap of 5% by 2025. If you don't hit that, you're not going to get, you know, this payout. We also see another social target of you know, hitting a 50% male to female split, 50-50 split in senior management positions by 2025. If you don't hit that target, you're not going to get a bonus payout. So we're seeing that fall under social, and we're seeing that being a part of bonus metrics and payouts that CEOs, CFOs, executive teams have to hit these targets in order to get a payout.
Okay, great. That's all the questions we have, Mark. Thank you very much. That's a really insightful presentation. I hope everybody enjoyed it. If you do have a question for Mark that wasn't answered today, in the email that you received about today's webinar, there's an email address. Feel free to pop it there, and I'll make sure that Mark gets all the questions that you have as a follow-up to this session. So thank you all so much for joining us, and thank you so much, Mark. That was really great.
Brilliant. Thanks, guys, for coming. Thank you.
Thanks, everyone.